F&B's second quarter BER building confidence index didn't fall, it plummeted 11 index points to 41 after it just lifted its head into the positive in the first quarter. John Loos, property economist at F&B, is with us in studio. John, it is a plummet. I'm not sure when last the index has taken such a knock. Looking at the long-term graph, you've got to go back probably to the financial crisis to see a reversal like this.
Back at the end of when the last recession came about, and Alec, if one looks at previous confidence levels, I guess it is a bit of a surprise that it suddenly turns like this, because the industry didn't seem to expect it a quarter or two ago. But then if you look at the economic numbers and you see one quarter's contraction already having happened and a possible second quarter contraction likely, then I guess it's not so surprising. It's a reflection of economic times and possibly even a lagged reflection of, or lagged impact of slowdown that's been coming a lot longer. We have, growth after the recession peaked in 2011 at 3.5%. I'm talking GDP growth now, and has since then broadly slowed for over 2 years now. So perhaps it's been a long time coming if one looks at it that way.
So much for the NDP. That was supposed to go the other way. Zuma was supposed to create 5 million jobs. Wonder where the hell they are.
Well, I think to turn big state organizations around that have become that are struggling, with their capacity, that's a long-term process. You're not going to do that in a quarter or two. You're going to do that over a decade or two, perhaps more likely.
This is the other way around. This is a indication, I guess, from the industry that, because it is a confidence index, that they see choppier periods coming rather than the improvement which seemed to have been on the cards, if you read your index, ever since 2012. So what caused this? Was this the platinum strike? The downgrade was is a little too recent for that to have impacted this. Where did it all come from?
Well, I think perhaps, if you look at the non-residential side, look, both the non-residential and residential side slowed in the quarter. More noticeably the non-residential side, but perhaps if one looks at it, there have been significant vacancy rates for a while in the area of office space. We've seen retail sales growth slowing for quite some time, so that may have been filtering through into retail vacancy rates as well. So we may have built 1 or 2 shopping centres too many already. So perhaps already, if one looks at other numbers when they catch up.
So has it all finally now come to roost? The chickens have come home to roost. People say in the last quarter, oh my goodness, what have we done? Have we built too many shopping centres? Walk around Sandton, where we work, and you'll see that the village walk has just been abolished or knocked down. So that there's going to be a new shopping centre there. Right next door to CNBC is a huge tract of land that is going to be developed as well. Are those guys taking a big chance, or do they know what they're doing?
Perhaps we are getting a bit ahead of ourselves, because it's difficult at the moment when you've got an economy that's not growing to see where the purchasing power comes from. Certainly, real household disposable income growth is not strong. That's the purchasing power that drives the retail malls. So it's tough to see where, and you drive around and you see another centre going up and you think, where's the additional purchasing power? So yeah, perhaps this is it. Look, it's early to say it. It was quite a sharp knock, but it is only one quarter, and from time to time you can get volatility in one quarter which rebounds straight afterwards. So we'll need another quarter or two to see for sure.
What will cause this to rebound from the sharp drop in the second quarter?
Well, as I say, a survey is not an exact science. It can be just certain data volatility, but I think it is possibly the start of a longer, a broader multi-quarter downward trend. If we look at the recent economic numbers, the reality is they're just not looking good. The only thing is that on the residential side, building activity stayed low for quite some time. It hasn't really rebounded very strongly since the recession a few years ago. And in the existing property market, agents have been running into more and more stock constraints of existing property. So unless demand falls quite substantially, one would perhaps expect some, perhaps for residential building activity not to drop too much, because I think we do need a little bit of extra supply. But
so house prices are stabilizing at the moment. Is that what you're saying?
Well, you know, in real terms, there's some house price growth, and there's, you know, in estate agent surveys we've had for over last 2 years an increasing percentage reporting stock constraints. So one would expect if that carries on, certainly for you know, not too much of a drop in confidence levels in building.
So stock constraints, it means they haven't got enough houses to sell.
Existing houses to sell, yeah. But that having said, I mean, it all, you know, that could change. I mean, demand for existing property as well could conceivably decline and reduce those stock constraints
being
of existing property, because we just do have a very weak economy.
John, you're being a real economist.
Sorry, Alec, that's
the one hand and then the other hand.
No, but
overall, what you're saying is that there was a sharp decline from your index. This decline is one that we haven't seen for some years, since the last financial crisis. You still don't know whether it's the beginning of a new trend.
I suspect it might be the beginning of a declining trend, but a lot depends on things like how quickly do we resolve mining sector issues, get the economy growing again. It's issues like it. I mean, we know this mining sector strike has had a significant impact. There have been electricity supply disruptions in manufacturing, helping that contraction in the first quarter. There are issues which there are unknowns at the moment. Does Eskom get its act together? Does the mining sector strike come to an end anytime soon? If that's not going to be the case and we continue contracting, then this could be the start of a trend which could go a bit deeper.
Very complex, but they all pull together, don't they? Thank you to John Loos, who's property economist at FNB, for joining the dots for us.